Welcome to Epoch Trades, where we trade the new age. Today we're going to be covering the key levels on the 1-inch network. As always, we have our key level criteria. We're looking for swing highs and swing lows, multiple rejections, acted as support and resistance, drastic moves away, obvious to spot, and recently formed. So let's move that out of the way, and we're going to start on the monthly here. We can start off with our swing high. Is a very obvious level, and anybody looking at this chart can see making it a key level. Now we also kind of see a bit of a zone here, so let's plot that in there. And knowing that this range, what is this range? It's about an 8% range, so maybe we can go to the weekly and see if we can fine tune this level more. What we also see is a swing low right here. So what we can see is price moved up, reversed, and at this point we've seen an obvious reaction to the level. We've seen long wick candles forming at this level, rejecting from going further. So let's plot this level. Now let's go ahead to the weekly and see what else we can find. Now looking on the weekly chart, we can see that there's quite a bit of noise going on in this area. It's quite all over the place, but what can we see in that area? Well, I can see a level right here. So let's go ahead and plot this. So with this weekly level, we can see price came up, is rejecting our monthly level with long wick candles, and came down to find a level of support with long wick candles and bullish momentum following. Price came back down and held this level. And we also see price rejecting this level as resistance, as price reversed down, holding our monthly level, coming back up. We see a reaction here, coming back down. We see a reaction to our monthly level and coming back up. Kind of in this zone here. Now, this zone is a little bit weird. I don't really like it too much, but we're going to keep it in as it was a monthly zone. And we can see that price did react at this level, and most recently, price reacted right at our level there. So as price comes down, we can see that this monthly level actually has multiple rejections. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, all the way going down until it finally broke. And when it finally broke, what do we see here? We see a level right here, right below our monthly level. Let's actually plot in a zone at this level, as we can look at it for future reference. So now, when price comes back up, we may expect a reaction, and since we have it plotted on our chart, we can see how the candlesticks form at this level. So what we also see is a point right here. We see the level came down, acted as support, came up, reversed, it broke through, pulled back, and now the level has acted as resistance. As it comes down, down, we can notice that it established a key level of support. Now price is right at this level reacting again. So if price reverses and starts going back up, we can see that this was the most recent swing high and can expect to see a reaction at this level. If price breaks right through this level, then we can expect to see price go all the way up to this key level. Now, these are all of our key levels on the higher time frames, monthly and the weekly. And we plot these levels because they hold more weight over the long term. Now let's head back to the monthly and see how our chart looks. As you can see, we've added more structure to our chart, and now we can expect where price will react in the future. Thank you for watching. Hope you enjoyed the video. Like and subscribe for more.